Hi folks, it's Caleb again. This is June 19th, 2010, and I thought I would just read a summary of a few news articles that I was looking at recently regarding to the recent record highs in gold prices. So let's see here. First one is from Market Watch, and it's June 18th. The title is Gold Soars to Fresh Closing Record. San Francisco. Gold futures climbed to a closing record high on Friday as more investors jumped into the bullion bandwagon, eager to chase better returns and wary of riskier bets such as stocks. So the gold for August delivery rose $9.60 to settle at $12.58, surpassing the Thursday record of $12.48 an ounce. People are tired of their 0% T-bills, afraid of the stock market, and afraid of the double-dip recession, said James Cordier, a portfolio manager at optionsellers.com in Tampa, Florida. He also said people are pouring into gold even at this high level. The contract hit a record intraday high of $1,263.70 an ounce in electronic trading, according to CME, which owns COMEX. Adam Klopfenstein, a senior market strategist at Lynn Waldock in Chicago, said, "There's big money that wants to own gold," he commented. No one feels that the economic problems across the Atlantic and in the United States are really solved, he said, and they are afraid of more credit concerns that will, quote, show themselves in the future. Frank Lesh, a broker and futures analyst with Future Path Trading in Chicago, said that he's confident that gold will keep breaking new ground in the future, perhaps achieving $1,300 as early as July. He said, "This has been a steady gain on a sustainable pace," and he thought that many investors were holding long positions in gold, obviously. People are looking for investments where they can make money, maybe not a lot of money, but at least not lose money, according to Lesh. At the present time, gold fits that bill. So yes, gold is at a record high, and as you saw, some people predict it'll break $1,300 as early as July. Here's another one that's probably also quite related to precious metals, also from the 18th, and it's from CNN. And the title is basically the dollar is strong, but not the one you think. And they're referring to the Canadian dollar. According to this article, the Canadian dollar, called the Loonie, is up 3% against the Greenback so far this year, and 10% over the past 12 months. Canada's economy is in healthier shape than the U.S. right now. No surprise there. Its unemployment rate is officially 8.1% to the U.S. official 9.7%. Canada's gross domestic product rose at a 6.1% in the first quarter compared to the 3% increase in GDP for the U.S. Canada is in much better shape than other countries around the world. It's not just a recovery, but an expansion, said Pierre Lapointe, and forgive me if I pronounced that wrong, global macro strategist with Brockhouse Cooper, a brokerage firm in Montreal. Lapointe said that part of that has to do with the booming commodities market. Canada has ample gold reserves and also exposure to oil in the tar sands in Alberta. The 5 largest Canadian banks are regarded as being in much better position than the top banks in the U.S. The recession was milder since Canada's banking system is fairly healthy, said Paul Ashworth, senior economist with Capital Economics, a research firm based in Toronto. Canada never had a housing downturn, and that was anything like what happened in the U.S. Ashworth noted that the rise in gold prices has helped the Canadian dollar, and also said that the fall in gold prices would probably hurt the loonie initially, but in his opinion, since the loonie is a petrodollar, any economic expansion would actually end up helping the Canadian dollar due to the rising price and use of oil. So either way, he feels like the Canadian dollar will do good. If gold prices go up, well, Canada mines a lot of gold. That'll be good for them. If the U.S. economy recovers and begins to consume more resources, such as oil, that'll also help the Canadian dollar due to the fact that Canada is, I believe, America's largest importer of oil. Canada exports the largest amount of oil to the U.S. The U.S. imports it. What's more, the Bank of Canada boosted interest rates by 1/4 point to 0.5%. So if you think about it, people are more likely to invest in Canadian bonds than the U.S. bonds of a 0% interest rate. Not something that you can get much return. 0 is a pretty low return. So what you used to see, just looking at these articles, was there used to be an inverse relationship between gold value and U.S. dollar value. Whenever the price of gold, the price of gold would go down when the dollar went up. But in the past few months, we've seen the dollar go up in comparison to, like, the euro, as people fled the euro. But they didn't just run to the dollar, they did that, but they also ran to gold. So gold isn't really connected to the dollar. It's kind of taken on a path of its own. And I would say, and not only me, but a lot of other people, since these aren't my ideas, I'm just reporting what I find, that gold is now basically thought of as an alternate currency. I suppose you could argue that it always was, but people basically the masses, the general population now sees that as such. So I would say that we're probably going to see a point where, or we could very well see a point where currency values will be expressed by the average person, not only investors, but the average person, in relation to an ounce of gold rather than the U.S. dollar. I've always remembered thinking of exchange rates and hearing exchange rates expressed from one currency compared to the dollar. Well, as the U.S. dollar gets in worse shape and the U.S. economy gets in worse shape, and as gold prices go up, you could very well see this the currency values expressed in per ounce of gold. That'll be interesting to see. Earlier I had said I had made a fairly safe estimate that gold would definitely break 1,300 by the end of 2010, and I was pretty sure that would happen. Yet, as I mentioned in the earlier article, that some investors believe it'll break 1,300 as early as the summer, July. We also saw silver go up to $19 or over $19 an ounce, and this is most likely because as gold prices will go up, and they'll probably continue to go up, the gold is going to get out of reach of more and more people to be able to buy any substantial amount, unless you want to buy it in like a 1/10 or a 1/16 of an ounce or whatever. So most likely you're going to see people diversifying out of gold into silver, for at least the reason that gold just is getting too expensive for them to buy anymore. So I hope this is helpful, and I'll be putting up a few more reports or summaries on articles. I really don't have much time to do very many because I am taking a foreign language course right now, so I'm pretty busy. Alright, well, I hope that helps, and I'll talk to you later.